Welcome to Frax Check, your weekly Frax vibe check. I am your host, Capital K, and I'm joined by our producer extraordinaire, Sam. We just want to wish you guys, before we jump in, a happy new year. This is 2023, and the Flywheel team's going to give it to you. But now we'll be going straight to the source of the truth via checking the chain. But before that, please subscribe to the Flywheel Pod. This year, we're on our march to our first 10,000s, and we need your support. And follow us at Flywheel Pod on Twitter and Telegram. This week, guys, I call this week New Year, New Me week. We have some potential trend reversals that I'm going to tease you with. And because if you recall, for the last few Frax checks, we've been ranging with some ups and downs, but mainly unchanged. So let's dive in. And as always, we begin with our regular programming, the peg. We saw it got as low as 0.996, which happened oddly enough on like December 31st. I guess somebody tried to attack the peg right before the year end, with a high of $1.001 for the week. Peg check, strong. We then took it to the market because you can't just trust a dashboard. So we went to Curve and tried swapping $100 million of Frax for USDC. In this case, we received 0.9979 as the exchange rate. Both metrics pretty much unchanged and quite stable. Moving on, we have our collateralization percent. Here lies the first inkling of the trend reversals. We see here that we actually finally decreased by 1.4% on the collateralization percent. And as a reminder, the collateralization percent conveys how much FXS, the algorithmic part, is used as collateral. Meaning the lower this number goes, the more FXS is used.
No.
God damn it. Okay. All right, I need to restart this slide,
no,
right?
It's cool.
Okay.
Let's roll
All
it.
Right. All right. So the 92% collateralization ratio is the first time that we have dropped below our 93.25% for the last, I think, like 8 Frax checks. So hopefully this is a reversal. Moving on. We have a massive change here on the decentralization percent. And if you could zoom in on the graph, you'll see that there's this vertical hotness on the graph of us increasing 55%,
wow,
over the last week. We're now at 22%. We got as low as 13%. We want to be at 33%. So we're literally halfway there. We're halfway there. So I'm very excited about this new 2023 New Year, New Me situation. So I loved it. But as a reminder, this is still very, very much under par. We want the collateralization percent in the 80s.
So on the decentralization ratio, I have a thought on where it could come from, but it doesn't seem like
okay,
increase it by 100 million, right?
Why? What?
Because that's 22%. So like we went from like 14 to 22. So that's almost a 10% increase, right? So looking at $1 billion worth of Frax, like how did $1 billion or how did $100 million worth of Frax collateral decentralize in the past week?
I don't know. You tell me.
Well, I have a thought that there's some stuff going on in Fraxlin right now with FPI that there seems to be some looping, but that's only 15 million worth of Frax. And so I'm not sure
that much.
I'm not sure. Yeah. Interesting. Maybe it's from more Fraxlin information. But that's a huge increase.
But your inkling of FPI is in the right leaning, right? Because there's another thing that comes up later that I will uncover. But Sam's always front running me, guys. He's always front running my content. It's coming soon. And okay, so back to these. I really want to drive this home. The collateralization percent, we want it to be in the 80s. The decentralization percent, we want it to be in the mid-30s. So that's the target. We're on our path, so I'm very happy there. But I hope I didn't jinx it. But gosh darn it, I'm just so excited. All right, quick summary. We have the peg check, quite strong. Curve swap, great. Collateralization and decentralization percent, on our way. We are on our way. Next, we have our Frax ETH segment, where we obviously cover Frax ETH. And as always, we check the peg. The peg here on the dashboard says that we are at 0.9991 from Frax ETH to ETH exchange rate. That seems pretty damn perfect. But obviously, always, we cannot trust the dashboard, so we go to the market. And we check here, and we use 3,500 Frax ETH. The reason being is that the largest Frax ETH holder is somewhere around that number. I don't want to dox, them. So I'm just going to use 3,500 as the amount, but it's pretty damn close. So with 3,500, we see the exchange rate coming out at 0.9969. So this is assuming the largest Frax ETH whale just decided one day to be like, I'm over it. And we're still going to be okay. So I really like to see that. I really, really like to see that. And I really want to cover this other segment that I always find interesting, because Frax ETH, this mechanic designed, allow for this, S-Frax ETH versus convex flywheel type of situation. And now we finally reached a 50-50 state, where there's 50% of supply in curve or convex, and then there's also 50% that is actually staked in S-Frax ETH. Like we finally found like this equilibrium. But Sam, what do you think about, like, should it be 50-50, or do you think it should be slightly skewed one way or the other?
I think as it gets bigger, I think eventually it's going to be about 80-20. So about 20% in the Curve LP and about 80% in the stake Frax ETH. I mean, you think there has to be a limit on the amount of bribes that can be paid out on a week-to-week basis. And assuming, I don't know, let's say we have 1 million ETH in the contract. That's a lot. That's a lot of bribes, right? So I think at that point it'll be 80-20. Right.
Yep. I think your inkling is right. I think your inkling is correct in this case. I've always felt like bribe is just a way to kind of kickstart the flywheel and get this product to a state where it can kind of run on its own and have like real yield.
Also, like after Shanghai, I think the incentive and bribe structure may be a little bit different, but that's a chat for another day.
Yeah, that's true. We should definitely cover that too. But okay, just to do a quick cap off here, the APY for the convex LP situation is 9.65% versus 7.94% for S-Frax ETH. So I'm very surprised to see this change in the composition of where Frax ETH is going, given that there is still this like 2% discrepancy. Yeah. So, but anyways, we're moving on. Let's take a look at the count of Frax ETH. And you guys recall, Dave, myself, and Sam all made bets on where we think Frax ETH can get to by 2023. And we got to 47,149, slightly short of all of our mega bull biases.
Yeah. Cooled off.
But it still represents, we're off by a couple magnitudes there, but it's all right. It's all right. You can't blame us for being bullish. We are biased. But we do want to highlight that this is still a 12% increase from last week. We're at 47,149 Frax ETH, and it's only continuing to grow. As mentioned, the S-Frax ETH side saw a lot of love this last week with an increase to 39%, all the way from 31% the week prior. So like I said, a lot of people are kind of just going into S-Frax ETH and just want to get that native real yield. But what I don't know, Sam, maybe you do, is like the 7.94% that it's reported on Frax Facts. Is that accounted for the lack of Frax ETH that is not staked in the S-Frax ETH pool? Like, is the multiplier already applied?
For the yield?
For the yield, yeah.
That's the like the block by block yield that's being paid out right now.
Got it. Okay, so it did factor into every validator is still going to get paid its amount. It's the Frax ETH that gets a more claim on the ETH reward because they are staked in Frax ETH instead.
Yeah. Like I think that again, there's some efficiencies at scale for like MEV tips and other additions that would increase the yield. And as we get larger and once they change how the whole block proposal system works, I think the yields are going to turn out pretty well. But again, look, I just checked today and, we have like 15 pending validators. So there's a lot of, the queue is getting big.
True. And also just a reminder, it operates on a cycle model. Like every Thursday night, midnight UTC is when the next, the previous cycle pays for the current cycle. So it's always kind of like one cycle behind in terms of reward. So, for example, when you put your Frax, your Frax ETH in there, it will take, like I said, a week before yours can turn on per se. But still pretty good. A 1 week lead time is actually quite great. But anyways, let's jump real quick to do a summary here. Like we saw, the peg was pretty much perfect at 0.9991. And then we looked at the curve swap. Like I said, we took the largest Frax ETH holder, went in there, swapped it all out, and we still received an exchange rate of 0.9969. The count is 47,149 up only. And the stake percent is hovering at a nice 48.9%, where both Sam and I think that it will skew towards this Frax ETH composition much more than the other one. So let's jump into our AMO holdings. Here we have a grand total of $1,004.7 million.
Whoa.
It's hard to say.
Oh, so the decentralization ratio came from the AMOs.
Yes. This is a massive change in the AMOs. But you were very close in saying why, because of the FPI. And the breakdown here is, I'll walk it through for you. The Curve AMO increased by 250 million, which is kind of standard because the Curve AMO is fairly large and that's just the way it moves. The Liquidity AMO increased by 10. The Investor AMO increased by 130. And the lending AMO increased by 50. Where did all the assets come from? Well, for the investor AMO, it's from this FPI Frax protocol on liquidity of about like 122 million. Crazy. But again, we'll probably have our in-house data scientists kind of figure that out for us to see where that money really did come from. And then the bump in the lending AMO, as you said, Sam, is purely from the Frax lend. And like I said, I think those two things together really changed the game because that's 50 plus 120 million.
That's crazy. Well, the Fraxland, somebody's looping FPI right now. I checked today and I just saw this in the chat. Somebody's taken like a few $100,000 of FPI and they're putting in Fraxland. They borrow as much Frax as possible and then they're buying more FPI and just looping it. So they've gotten it up to like $15 million just in that one pool. It's crazy.
Wow.
Very smart though.
The FPI or FPIS?
No, the FPI. There is no FPIS.
FPIS looping. Okay, not yet. I see. I mean, yeah. Okay. That's fair. Let's see. I know you're a big fan of FPI. I'm still yet to be convinced.
I just think it's sitting. I'm pretty sure they're sitting on a few $1 million of excess liquidity, and at some point that has to go back to FPIS holders. And so, with FPI hitting like all-time highs and inflation cooling off, at some point that excess liquidity has to be returned to FPIS, and for like $2 million going back to a $10 million market cap token, once they release the FPIS, it's going to have a pretty significant price impact. I mean, your yields are going to be, I don't know, like if you think like even a 20% yield on FPIS is going to drive a lot of demand for it.
No, that's fair. And also with inflation coming down, that actually makes FPI much more sustainable.
Exactly.
Yeah.
It
actually is bullish. Like that, for inflation to go down is bullish for the inflation resistant coin.
Yeah.
Oddly enough. Okay. All right. Let's quickly move on to the profitability money check portion. And for December, brace yourself. It's not pretty. It's not pretty. We are at a loss of $650K for the month of December. And let me just quickly highlight where the revenue came from. We have revenue of $1 million from CRV, $250K from Convex, and $80K from FXS, which gives us $1.37 million of revenue for the month of December.
It's pretty good.
Now, in terms of expenses, yeah, I mean, it's not bad. I mean, top line revenue like that's not bad, but it's just the expenses of the bribe is kind of scaling out of control. And I wouldn't say out of control, but it's within the parameters since we're still trying to grow Frax ETH, right? So like it's all part of the plan right now is just growth for the Frax ETH product. And it makes sense to me. This is a business unit that just launched and it needs all the growth it can get. So I'm down with that. We may have ended the year down quite a bit here, but the expected launch of Frax ETH and the cost to grow that business unit is all within the plans. But now it's 2023, so let's keep our hopes up, upward and onward, champs. And we're going to take a quick summary. Sam, unless you have something to say.
Oh yeah. I was going to say, you know what? I think we had those predictions for Frax ETH at the beginning of last year, or at the end of last year. I actually think my $1 million or my million ETH supply of Frax ETH might be too low. Cause I was reading a bunch of stuff this week in Twitter just about how the staking rate on Ethereum is only about 10% right now. And if you look at other proof of stake chains, it's closer to somewhere between like 50 and 60%. So if you just assume Frax ETH is going to get fully mature in the next year, plus you have another 40 to 50 million worth of ETH that will be staked post Shanghai. Because I think a lot of people are waiting until after Shanghai. We might have at the end of the year like 6, 7 million, 10 million Frax ETH.
Man, tell me more.
Tell me more. And again, and then you have what? Then you're making 5%. Let's just assume we have 10 million, right? So you're making 5% on 10 million ETH, which is what? It's like 500,000 ETH a year. And then what is it? 10% essentially. So 50,000 ETH a year goes to the DAO, to Frax shareholders.
Oh, no, 4%.
4%. Yeah, 4%. 4% of that. So 40,000 ETH a year would go to token holders. That's so much.
I think it's 20,000 ETH. But yeah,
why would it be 20,000?
the numbers that's wrong.
No, off of 10 million.
Because
right. So
isn't it?
Yeah, it's like 8%. It's 8% of the
10 million
of the 5%. Right. So 10 million times
8% of the 5%.
Like 5 times 0.08. Yeah, it's 40,000 ETH, which even at these prices, that's $48 million a year in extra revenue we could be having by the end of the year.
Okay. All right. I'll trust you with the math there. That's nice. Good job for all the FXS holders. All right, so let's quickly go over a money check summary here. We have the AMO holdings exhibiting astronomical growth, crossing that $1 billion threshold again, and we haven't crossed this threshold in a long time, and that represents an 83% increase over the last week. And for the month of December, our profitability weren't as great. We were down $650K, but like Sam said, we're super bullish on Frax ETH, and we think that business unit itself is going to generate a lot of income in the future. So paying for growth now is a prepaid expense per se. And then moving on, we have my favorite part of the Frax check. We have the liquidity check. And you know how at the beginning I said this week is the new year, new me week? Well, unfortunately, that is not the case for this specific metric. We are literally at the same spot at 77% as we were for the last 3 Frax checks. So this is new year, same old me. And we're just trailing behind this damn 3 pool. Oh, I feel so sad when I see this. Like, we were so close. We had it and then we lost it in like just a matter of weeks. We just had it and then we're gone. But it's okay. We're still here. We're pushing on. The Frax base pool currently has still a ton of liquidity at 463 million liquidity in the Frax base pool against the 3 pool of 605. And obviously you see here the Frax 3 CRV is at 474. We're neck to neck with the Frax 3 CRV. So let's first flip that and then we'll gun after the 3 pool just so that we can set more realistic goals here.
So it might be, so this is some like alpha from the newest podcast, but we might see a Frax Curve USD pool that might flip everything in a couple of months, but we'll see.
Which is fine. Ideally, all these pools get deprecated and everything just funnels into this one. I love to call them like a super stable. When it's like just like the LP token of Curve becomes like the counter pair for every stables out there. Because of the super stable.
Super stable.
You heard it here first on the Flywheel Pod. Super stables.
I like it.
All right. But that's not all. We also have these things called meta pools, which are, assets being paired against the Frax base pool LP token. And we see here, we have the TVL of stable pairs finally crossing that $47.8 million line. We are literally just kissing that $50 million line for the last, couple of Frax checks so far. So let's flip that 50 and march our way back to 100 because we were there for just 1 week and then we just fell from grace quite precipitously. And that is not all. Remember, guys, the meta pool could be used with stable pairs or non-stable pairs. And some examples of non-stable pairs are the CVX FXS and Frax base pool, CVX CRV Frax base pool, Badger Frax base pool. So, if any other projects are out there looking to add more liquidity to their token, as a reminder, Frax base pool do cover non-stable tokens as well. Okay. And for the non-stables, we have $10.2 million of non-stables pair already being paired against the Frax base pool. There's still plenty of liquidity left, guys. So come and get it. Join our Telegram at Flywheel Pod and ping any of the hosts, and then we'll try to get you situated and set up. All right. So quick summary time here. We have the Frax base pool at 463 million, which is 77% of the 3 pool. We have Metapool TVL of stables, 47.8, non-stables, 10.2, and TVL of all Metapools, we're at a nice 58 million. Pretty solid. We definitely want more people using the Metapool, so come join us, please. And lastly, the main reason why we track all of these damn metrics is for one thing, and that is the Frax supply. And that number, unfortunately, is pretty much unchanged at a 1,018 million Frax. We are getting scarily close to the 9-figure digit line. So I don't like it. And but it makes sense. Like, there's a give and take, right? I like seeing the decentralization percent go up. I like seeing the collateralization percent go down. And this number can't grow so fast that it kind of throws everything out of whack. But I definitely do want to see this number back up again, because I believe we were like at the peak right here. We were, Sam, do you remember what number that was at the peak?
It was like 2.4 billion or something like that, right?
Yeah, you're right. 2.7 billion. Yeah. So quite a fall from grace there too. But we're on our march back.
That's right. The increase in the decentralization ratio makes me bullish.
Mm-hmm. Yeah, dude, I
finally
was
ticking down on the collateralization ratio too.
Dude, I thought we were going to go to like zero decentralization. We become a USDC pair, a wrapper rather. But thank goodness that is not us. That is not our destiny. And we're here to man our own destiny. And with that, I'm going to hand it over to our producer, Sam, to take us on the governance roundup.
All right. So, quiet week is coming into the new year. There was a little bit of drama last week, which we covered about the deployment of a new Frax Ferry pool to Moon River. It actually failed, surprisingly.
No.
Yeah. And there's no reason why. Unfortunately, I don't really understand this one. Convex didn't vote on it for some reason. Maybe they didn't get quorum, but only 9 million FXS voted on this, which normally you have about 27 million.
Oh, that's not enough.
Yeah. So this one probably needs to go up for a revote. I'm guessing it was just the New Year's times. And yeah, but it's strange. I don't think there's any sort of hacks or any sort of bad debt on Moon River. So we'll see if this one clears up in the next cycle. The other one that is coming is somebody just put out a Frax Ferry for Avalanche an hour ago. And that one was put out by Barry, who suggested that we deploy a Frax Ferry to, he got the title wrong, or maybe he didn't. It says Avalanche in the title, but then in the summary it says Moon River. It probably needs to be fixed. But I think it's for Avalanche. So this would be another kind of bread and butter deployment. Probably will pass. The big ones that are coming up this week are FIP 151, 152, and 153. So this is for approve a balancer 2 pool of BBA Frax and BBA USDC, AMO, FXS Gauge, and Bribe pilot program. So if you're not familiar with boosted pools on Balancer, I'll give you a little description of how they work. Normally when you have an AMM, there is, you put money on both sides, right? So 50-50 on each. That money is then just kind of dead there. So you put in Frax and USDC. That Frax doesn't really earn a yield other than what the trading fees are. Now, on most days, you don't need all the liquidity to trade back and forth between Frax and USDC. I mean, you probably maybe need 20% of all the liquidity in that pool. So what Balancer has done is created these boosted pools, which allows the pools to take a portion of the deposited liquidity, in this case Frax and USDC, and then deposit it into Curve or some other sort of interest-bearing asset yield generation farm. Maybe they put it in Gearbox, maybe they put it in Compound. I don't really know. They have their own strategies on how these work. But they turn around and then you can earn an extra boosted yield on top of whatever the LP is making. So, maybe in this case, the LP is making, 3, 4, 5% just on trading fees alone. And then in addition to that, you might get another 2 to 3% from the boosted pools. It's a really interesting idea. So the idea is to deploy a 2 pool of just Frax and USDC liquidity. And this would be done as an AMO. That's one of the things that was suggested. So FIP 151 is to deploy an AMO for 2 pool, which would be allocating limits of $6 million worth of Frax and USDC in the first month and $12 million in the second month. FIP 152 would approve the FXX gauge they would approve the gauge for the 2 pool. And then FIP 153 would be a approval up to $100,000 bribe worth of FXS or CVX CRV as a pilot bribe program to acquire VBAL or AURA tokens. So AURA is essentially convex for Balancer. And the trial program would run 3 months.
Got it. Okay. So so whenever these proposals ask for the 6 and the 12 million, it's going to come from some other AMO or somewhere, right, within the Frax treasury.
Yeah. So it's essentially like redeploying protocol funds into the balancer pools, which I don't think is a bad thing, right? Because those pools are then going to be boosted. We'll make money on it, and then additionally, we'll make money through protocol income through Aura or VBAL.
Yeah, no, I mean, now is a good time as any to accumulate these, money Legos tokens as quick as possible.
Yeah, and I like the Balancer team. They're doing some really cool stuff. They're taking some different different ideas on how to use the V system, and additionally deploy these different types of AMM pools. So it's cool that you could deposit your funds here and then earn a boosted yield. Additionally, they also have a Stake Frax ETH pool with like Steth, Stake Frax ETH, and then RETH, I think, as well too, which is pretty nice.
Nice. That means we need to add Frax ETH in there. Right. That's interesting. Why can't we do that with all our Curve? Obviously, we have a ton of liquidity in the Curve AMO, but I guess having a sticker value of like, hey, this is how much TVL we have is a signal of confidence to the market, rather than having like, hey, we have $300 million of TVL, but we're going to take 200 of it and go farm somewhere else, and we'll bring it back when you need it.
Yeah.
May cause a little bit of a worry for people, I guess.
Well, I'm also very pro using protocol funds to go earn tokens from other protocols as well too. So in this case, earning Aura would be really good for the long term, because I'm sure that we'll be supportive of Balancer, and I'm sure that we want to have a stake in that system. So owning Aura will be a good thing for the Frax protocol.
Yes, we want Frax everywhere. So,
and
all
then
good things. Anything else on the governance?
So there was the Eigenlayer RFQ, which was posted 2 weeks ago, but I don't think it's gone up for a vote. I'm not sure when those are going to go. And then there was also a request to increase the Fraxland AMO allocation for the Geom Frax pair, which is currently under discussion right now.
Nice. Our friends over at Ohm wants to 9-9 again. Let's get it.
Yeah. So looking forward to that. But yeah, quiet week. I'm sure it's just because of the holidays, and we'll get more proposals coming in over the next few weeks.
Yep. How did things go with your BTC proposal?
I don't think it's gone up yet. I'm not sure if it's going to go for a vote or something else, but it hasn't gone to, let me check Snapshot again. No, it hasn't gone to a Snapshot vote, because I don't know. I'll ask Nadir about it this week.
Yeah. Please do. I definitely think, and that'd be such a cool product, like for Frax to offer. Like, remember Sam K always says the three $1 trillion markets is Bitcoin, ETH, and stablecoins.
Yeah.
And if Frax gets to play in all three of those markets, man, I think that's very powerful.
Yeah, we'll see. I mean, I think it'll be interesting. We need to do some more reporting on Eigenlayer stuff, but I think these two RFQs could be pretty powerful for Frax going into the new year.
Cool. All right, guys. Well, that is it for this week's Frax Check, the first one in 2023. Thank you so much for joining. And please, none of this is financial advice. Sam will put a disclaimer somewhere on the screen for you guys to read. And we are biased and we are bullish. And one last thing to say is we are on our very own march to 10,000 subscribers on YouTube. So please smash that subscribe button. It really does help. And please join the conversation at Flywheel Pod on Telegram and on Twitter. You can follow me at 0xcapital_K on Twitter.
And I'm at traders_insight.
And we will catch you next week. Peace.